So I just want to repeat myself and put it in a different words. The thing about accrued is I have a financial year. Say it starts 1st of March, meaning it ends 28th February. Right. Now when I set up my balance sheet and my income statement, I want to show, when I do the income statement, I want to show the income or the expense that represents the period of this financial year. Okay, so in other words, I want to show the full year's income or expense. But now what happens is that I did not physically receive or physically pay the whole expense. So now what I paid or received is not the same as the income or expense. For instance, let's say I paid my water and electricity up until here. Can you see that it's only a part of the year? It's only a part of the year, it's not the whole year. Ne? So in other words, the expense I paid is not a true reflection of my expense for the year. And that is why I need to still add the accrued expense. In other words, the expense I know about, but I haven't physically paid it. You see? So now I need to add that accrued expense so that I can show the true reflection of the expense on the income statement. Does that make sense to you? And that is why an accrued expense will always make my expense more. Because if I go look at my trial balance, if it says my water and electricity is 7,000 Rand, this is in my pre-adjustment trial balance, then it means up to date I have already paid 7,000. But it doesn't mean this is my full expense, because I need to take into account what haven't I paid yet. So if they tell me I received an account but I haven't paid it, I'm going to pay it next year, but it's still part of this year's expense. So that's why I need to add it. So can you see the difference? If I tell you, if I ask you what is my payment would be 7, but my expense would be 8. You see the difference? Okay, so the 8 would go to the income statement, and the difference would be my adjustment that will go to the balance sheet. Okay, and that 1,000 is something I still need to pay, so it's an accrued expense, so it will fall under payables. Can you hear it says I still need to pay the bill, payables. Okay, if it's an income, same thing. Then my receipt would be 7, but my income would be 8, and the 1,000 adjustment would be a receivable. I still need to receive this money. Okay, but my income is both what I already received and what I'm supposed to receive in this financial year. Is everybody sharp? So yesterday I did with you the entries in the T accounts, ne? So let's just quickly revise. I said I already paid 20,000 water and electricity, and my adjustment says that 1,000 has not been paid yet, so that's my accrued expense, right? Which would become a liability because it's like debt. I still need to pay it, right? So can you see 21,000 will go to my income statement, and 1,000 will go to the face. So that goes to the income statement, that goes to the face of the balance sheet. So let's go look here. In my trial balance, I will now have accrued expense on the credit side. Now I want you to see how to read these tips. Can you see that this account is in the balance sheet section? So it is either a liability or an asset. Nee? If the amount was on the debit side, it would be an asset. But now it's on the credit side, which makes it a liability. Right. The water, is it water and electricity? The water and electricity is going to be 21. So water and electricity is going to be 21. That would be the amount going to the income statement as an operating expense, and to the balance sheet will go the 1,000, which would be a current liability, which go into payables. Okay, so accrued income, same principle. It's just now it's going to be a receivable because I need to receive the money. Okay, so if I look here, I've got commission income. Now commission income would be on the credit side, meaning this is how much I have already received this year. Can you see again? It's a pre-adjustment. So that amount is before the transaction they give me there. So this transaction, they say, commission income of 500 for work done in February has not been received yet. So, what is the word? It's something that's still outstanding. It's receivable. So it will be accrued. And because it's commission income, it will be accrued income. Okay. So, what does any accrued do to the income or expense? It pluses it. It makes it more. So I know that 500 is going to go to the credit side. Accrued income. Right? And my accrued income will be debited with commission income 500. Now what do I see? My real income that goes to the income statement is going to be 1875. So can you see here again? This is how much I already received. So this would be my receipts, right? This is what I still must receive. So the reflection of the real income would be what I already got, what I'm supposed to still get, gives me my true income. Does that make sense? Okay, now if I go to the trial balance, I will have an accrued income of 500. Can you see now? Again, what is my clue? It's in the balance sheet section, so it's either an asset or a liability. It's on the debit side, and the debit side makes this an asset. So I know this is going to be an asset in the face of the balance sheet. Okay, or in the notes. Nominal, I'm going to have commission income, and it will be my balance, what I already received, plus what I'm still supposed to receive, the 1875. This is the true income. If it's the true income, does it mean that this is equal to my cash? No. It just means some of it I already received. The others I'm going to receive in my next financial year, which by the way is tomorrow, ne? Because 28 February, end of this year, tomorrow 1st of March, beginning of the new year. You see? Okay, so in the income statement, the 1875 will be an operating income. Ne? And in the balance sheet will go the 500, and it will be a current asset, and it will fall under receivables. I still need to receive this. Okay. Can you see when I look at this exercise now? The adjustments is now becoming more and more and more and more. Ne? Can you see number one, the physical stock take? This would be my trading stock deficit surplus. It would be my consumable stores on hand adjustment. Right? Next one. Telephone are outstanding. Can you see this is going to be a accrued one, the new one. Depreciation. Oh, we all know how depreciation works. Can you see this is your note 3 thing? Ne? Rent for 1 month receivable. Meaning this is also going to be a accrued. Now I want to ask you, is number 2 accrued income or expense? Expense. How do I know it's an accrued expense? Because telephone is an expense. Rent for 1 month receivable. Now can you see they don't say what type of rent, if it's rent, income or expense. How will I know by this wording if it's an income or expense? Receivable. The word receivable, that's my clue. And the other clue is if I go to the trial balance, I see rent income. And if they didn't say income, how will I know it's an income? Because if I look at the nominal section, ne, the debit side is expenses and the credit side is income, and it's on the credit side. Can you see all the different things there? Okay, now what I want you to do is I want you to do the income statement. Now, when we get to the depreciation, I don't want you to do the depreciation now. You just write in the income statement the word depreciation. Okay? You do that, so it means you can't finish all your totals, which is fine. I just want you to do the income statement, ne, as far as you can, so I can mark it with you in a few minutes. Okay, so quickly start.